Joins us here at Post 9. Morning, Robert.
Good morning, Carl. Good to see you. Well, they are the 25 firms that specialize in advising investors worth more than $25 million. CNBC's new Elite Advisors list highlights the independent financial advisors who have the history, the scale, the expertise, the services, and the current client base to solve the most complex problems of today's ultra-wealthy investors and families. And these firms manage more than $2 trillion combined. They have headquarters in 15 states, offices around the U.S., even in Europe, and they range in age from the 103-year-old former family office of the Pitcairn family to the 3-year-old merger. Now, with fees under pressure and wealth growing fastest at the very top of the pyramid, advisors are all racing up the wealth ladder to serve the ultra-wealthy.
The state of the wealth management industry, particularly the industry around high net worth and ultra high net worth clientele, has become increasingly competitive. There's significantly more wealth to be managed, and there are more firms as a result interested in serving the clients who have that wealth.
But for investors, all these competing claims have caused a lot more confusion. So CNBC chose the 25 elite advisors through a comprehensive process in consultation with Cerulli and AcuPoint Solutions. We solicited information from over 100 firms, including the share of assets from ultra-wealthy investors, the breadth and sophistication of client services and products, minimum account size, client retention, and tenure. We also looked at regulatory disclosures and SEC forms. Now, firms that achieved the highest weighted score overall made the list. You can find the full list, our detailed methodology, and the questions every wealthy investor should be asking their advisor at cnbc.com/eliteadvisors.com.
What's ultra these days? Ultra wealthy.
So this measures firms that specialize in 25 million
25,
plus.
I saw that.
Yeah. So sometimes it's decided at 30 million plus, but it's somewhere around there. It basically gets to the break point between just your retirement to multi-generational wealth, where you're really thinking more about your kids and the next generation.
Where are they advising them to put their money these days?
Well, a lot of their advice is it's financial, but more of their advice is around how to set up a trust, structure the trust, taxes. Taxes is becoming very core to this group, and philanthropy advice. So it's less about where to get that extra 1 or 2% of performance. What these folks really care about the longer-term holistic planning.
So you're not even going to give us a hint. We have to go on to check out the list.
You're going to, check out the full 25. And it's really interesting. You've got some firms that were spun out, BBR spun out of Goldman years ago. You've got firms that started out as family offices. You've got firms that are now doing a lot of roll-ups, so a lot of different structures. And, it's a really interesting list from very old firms to new firms. All of them, though, are the real deals in this space, which is the hard thing for investors to figure out now that there's so much marketing hype.
So ultra, and then is there something above ultra?
Well, that would be like the family offices would start.
That gets you there.
Yeah, that gets you. That's Sarah, like just so 200 million.
Sarah needs to know.
Yeah, 200 million.
Ultra, family office.
Yeah, 200 million. Yeah, once you hit 200 million plus, that's when you're in the family office sector.
But you don't have to be a family office.
You don't have to be. No, many billionaires don't have a family office. So
that sounds great. It sounds like a lot of work.